As you all know, it's been a tough couple of weeks in the markets, and the month of August is off to a terrible start. The S&P 500 and Nasdaq just posted a few of their worst sessions in years, and trillions of dollars have been liquidated from the markets just in a couple of days. The fear is quite literally getting extreme, and times are hard. A lot of money is being lost. But it's times like these when I believe it's most important to remember that there will always be ups and downs over the course of your journey as a trader, because volatility and uncertainty is embedded within the nature of the markets themselves. In this video, I want to briefly talk about kind of the macroeconomic picture, why this macro storm is occurring right now. But more importantly, I want to discuss how I personally navigate through tough times like these, how to kind of control your emotions and do your best to stay rational during these very irrational and emotional times. And then maybe even more importantly, I want to talk about how you can profit during times like these. There will always be diamonds in the rough, regardless of the market conditions, regardless of the macroeconomic backdrop. There's always a bull market somewhere. There's always ways to make money. And in this video, I don't want to spend too much time talking about puts. I did that a lot in my last videos. But if you want to check those out, we called them pretty well, and we've actually made a lot of money on puts over Waves Capital. But I want to talk about a few of the plays that I'm personally excited about. All three of these are announcing earnings in the week ahead. As I'm recording this, it is August 4th. So just keep that in mind. But there are always ways to make money, and I want to talk about that and share a few plays that I'm personally excited about. As always, I can never guarantee anything. I can't guarantee any outcome, but just know my money is where my mouth is, and that's proves true for every video I ever record. Okay, that's the video, you guys. Right off the bat, if you do want my daily newsletters, if you want a full breakdown of my personal portfolio, if you want to know how I'm personally trading every single day through this earnings season, through small cap earnings season, which is kicking off this week, super excited. It's the first link in the description of this video. It's been a tough few weeks for most, especially if you're just a long-term investor. But over at Waves Capital, I'm very, very proud to say that we navigated this environment well, not only with put options, but with some call options as well. And we've actually made quite a bit of money over the past few weeks. We are up well over 2x in the past couple of weeks. So if you want to join Waves Cap, if you want to become a member of the portfolio and newsletter group, once again, it's the first link in the description. It's $15 a month. Give it a shot. You can always just bail out or opt out if you're not liking the product, but I'm very confident in what I provide, and I trust you'll stick around. So I appreciate it if you check it out. Once again, it's the first link in the description of the video. But if not, no worries at all. Let's get to reading. Dow closes 600 points down, with the Nasdaq entering correction territory after a weak jobs report. And before we move on to this, I want to quickly just reference the title of this CNBC Pro article, which I think pretty much in a single sentence sums what just happened up pretty well, along with sell the news. Okay? It turns out the bad news for the economy may actually be bad news for the stock market. There was a perverse view this year that bad economic news was actually good news for the stock market, as the heat coming off the economy would give the Federal Reserve the green light to cut interest rates. And this week, for the first time in a very, very long time, we saw the accumulation of all of this anticipation of, again, bad news kind of being good news for the past few years now, finally coming to an end. And now bad news is actually signaling that there could be a recession on the horizon, regardless of whether the Fed cuts rates or not, which at this point, it's pretty much guaranteed that the Fed will cut rates by at least 25 basis points come September. But the reality is 25 basis points doesn't really matter. If they cut 50, that's different, and we'll cross that bridge when we come to it. But for now, this was just a massive sell the news event. Okay, so let's read over a few quick paragraphs here, and then we'll talk about the fear and greed index as well. This is the S&P 500 fear and greed index. Just signals how much fear is in the markets based upon 7 different indicators. Okay, and you guys can just Google this if you want and go read over those. I recommend you do if you're not familiar with this, but this can be a helpful tool to use, or just the cherry on top of your overall thesis. If you're already bearish, you can probably use, if you're feeling bearish, okay, easy example. A couple of weeks ago, we were getting into greedy territory on top of looking very overbought, technically, on the S&P 500 and Nasdaq. That, for me, was a good sign that there was a popping of the bubble coming, or just a correction coming, which we're seeing now. Again, we called it. Not everything came to fruition, obviously. Not everything's going to go exactly according to plan. I'm a trader, not a fortune teller, but again, you just do your best with the data available to you, and that's all you can do at the end of the day. Hopefully you make some money off of it. Okay, so stocks fell sharply on Friday as a much weaker than anticipated jobs report for July ignited worries that the economy could be falling into a recession. You can read all that. I'm not going to read all of those numbers, but stocks sank after July job growth in the U.S. slowed more than expected, while the unemployment rate rose to the highest since October of 2021. Non-farm grew by just 114,000, a slowing from 179,000 added in June, and below the 185,000 expected by economists. So that's way below. I mean, you're talking like 30-40% below expectations. Unemployment increased to 4.3%. So again, typically in the months prior, this probably would have been good news. The stocks would have rallied on this news because it gives the Fed the inclination that what they're doing is working. High interest rates have, in fact, put the economy into have slowed the economy significantly, which will ultimately bring down inflation just based upon supply and demand economics. There we go. So again, usually would have sold off this week. Sell the news, buy the hype, sell the news. It's been buy the hype for a few years. This was finally to sell the news. And considering the markets were already so incredibly overbought, it was bloody. I mean, there's if you scroll down this watch list, it's hard to find a name in the green. One of them was Philip Morris, which is one of our long plays that have provided us with such some of the best gains over the past month over Waves Capital. Some of our original calls 10x just over the past couple of weeks, which is amazing. But remember, you guys, there will always be diamonds in the rough. Before we get to the 3 plays, I'll share 3 plays, 3 small to mid cap plays. The first of which is Palantir, as you can see in front of us. I'll elaborate on why I'm bullish on their earnings tomorrow, Monday, August 5th. But first, let's read over just a couple paragraphs from the newsletter I just sent out, and then we can move on. Okay? So, you lost money this week, right? There's no use in crying over spilled milk. There's no use in dwelling upon what has happened. Okay? As I said in our flash trade, that's like the first newsletter I send out of the day, where I just quickly break down my trades. Fail fast and move forward. Days like this suck. Ending a winning streak sucks. Losing money sucks. Get over it. There are parts of the trading game that are unavoidable if you're mortal. If you're a mere mortal, there will be good days and there will be bad days, but sulking over losses is simply unproductive. So get back on your board and start riding towards the next victory, because clear skies will always be on the horizon. It's always darkest before the dawn, whatever cheesy analogy you want to use. They're cliches because there's some truth to them, okay? This week sucked for most people. Again, trillions literally eviscerated a lot of people, especially if you were trading call options. Yeah, my condolences, because, I don't know, just go crack. I hope you crack plenty of beers over the weekend, but there's always greener pastures. We'll just keep going with these analogies. There's always greener pastures on the other side. And right now, especially because we're now starting to look oversold on the charts, and the fear is getting to levels of extreme, which means that there should be some reversion to the mean, to some reversion to neutrality. That makes me bullish on the markets. And primarily on small to mid caps, because small to mid caps, from an earnings perspective, from a forward PE, which is price to earnings ratio perspective, are still historically very undervalued relative to large caps, even though large caps have had a significant correction over the past couple of weeks. Okay, so I'm specifically bullish. I'm not going to say I'm bullish on the Nasdaq and the S&P. I don't think we fall much further. I don't think we see these crazy red candles, at least in the near future, due to kind of the oversold nature of the markets, and once again the extreme levels of fear that we're approaching. But when it comes to small to mid caps, Palantir, Veritone, and another name, Digital Bridge, which is right here, I am feeling bullish. All 3 of these announced earnings this week. And although I'm not going to take a look at Veritone and Digital Bridge, again, I actually include these charts. I pretty much talk about these 3 every day or every other day in the newsletter. Talk about updated price targets and how I'm trading them, obviously. So again, it's the first link in the description if you want to know how I'm trading all small caps through this earnings season and put options. How we were able to make money over the past couple of weeks is available here. Again, first link in the description. But as far as Palantir is concerned, we'll look at this. Not going to take a look at Veritone or Digital Bridge today. Those are for a future video. But Digital Bridge, DBRG, Veritone, ticker VERI, and Palantir, who announces earnings tomorrow, I am feeling very bullish on. As far as Palantir is concerned, if I'm correct about Palantir succeeding in impressing, if you're watching this at a later date, please let me know if I was right or wrong. If I'm correct about Palantir impressing on earnings tomorrow, there's so much geopolitical. I'll actually just kind of give you guys a look. Got to scroll over past that because that was all my positions. Palantir, you can see here, Palantir's revenue growth has been impressive. They've reached sustainable profitability in 2024, and there's been an insane amount of geopolitical issues arising, which is where Palantir's services shine. Although the stock has an insane PE ratio, I believe it's around 200, which is crazy. I think that has a great shot of jumping on earnings. And I will say that I think it has a great shot of not necessarily, like, again, regardless of how good your previous quarter and how good your guidance is, it's super difficult to forecast or to justify, a 200 PE ratio. But Palantir has all the makings right now for a stock that is just, it checks all the boxes for likability and hype potential. And as you guys know, I trade on hype. The two-wave theory is based upon emotion and hype. And I think that this earnings report could possibly catalyze a small, short-term hype cycle for Palantir, especially in the case that the greater markets rally and bounce back like I believe they will. Okay? As always, if I'm wrong, these will tank. But remember, my money is where my mouth is. I will say, I do have some Apple puts on board. I got smoked with Apple puts after their earnings report, which was just on Friday. They only rallied, 0.5%. But considering the rest of the market was down, my put options did pretty bad. But I will say that I actually repurchased a bunch of put options, and I am bearish on Apple because I actually think a lot of capital is going to exit Apple and enter a lot of these, even in the Mag 7, like Tesla, Amazon, NVDA, have gotten so beaten down that I think capital will begin to exit Apple and maybe flow into these stocks, and again, small to mid cap stocks as well. So bearish Apple, bullish small to mid caps, primarily the three I just discussed. And, we'll see how this cookie crumbles, see it unfolds in the week ahead. I appreciate you guys watching. I appreciate it if you join the team. I appreciate all of you who are riding with me already and are existing members of the team. And I'm excited for what the rest of the month of August has in store because, once again, clear skies are on the horizon. Times will get better. They will always get better, so just don't quit. Don't cry. And, get ready to ride. I appreciate you guys watching. Until next time, always remember, take action, make waves. Peace.